Monday.
In case you're wondering what it is. It's a Man U fan, but that's not.
Oh, wow.
So I'm in trouble there.
Yeah, well, together, brother.
Okay.
By saying, as long as you know, they get money.
No, yes, humble pie.
Your money should work as hard as you do. Join us on Classic FM for a refreshing conversation.
Welcome to Wealth Management and You, 5:30 every Monday here on Classic FM 97.3. My name is Chico, and live in the studio with me, as usual, our financial expert, Rafa Emenyono, is in the studio. Rafa, how are you doing today?
Good evening, Chico. I'm doing well. I'm doing well.
Really?
Is there a reason why I shouldn't do well?
No. How? Why? For what? Our topic today is a review of the Nigerian market in first quarter 2026. Should I hold my investment in Naira or dollar? I know you like the answer to that question. Don't worry. Here to talk to us about it is Bolade Atekoja. How did I do with the surname?
Very well, Chico. Very well, Chico.
Wonderful. And I can tell you that Bolade looks very Igbo. But he's not. All right, now we like to just touch on things before we get into. Rafa says he's okay, but I know that deep down he's not. And a little bird says to me that you're not fully okay either. That's because
Very rough week.
you see there is such a thing as crumbling under the weight of one's own expectation, and it's a road that has been traveled a number of times prior. But that's all I'm going to say.
In case you're wondering what Chico is saying, Chico is a Man U fan, and Bolade and I are Arsenal fan, unfortunately. But we're fine. We're good. We'll bounce back. Yeah.
Amen. Today we're going to build our conversation around an overview of the Nigerian market stocks, fixed income, alternative asset classes, and macros. So I'll hand over to you, Rafa. But my first question really would be, do you see the capital market continuing the current growth trajectory? And is it a good time for profit making?
Thanks, Chico. So the Nigerian market has largely been an outperformer this year, and naturally, when you find that level of performance and a broadening of the investment base, you tend to find questions coming around sustainability. And I think most people or most investment professionals realize that we're changing the environment. The environment is changing. It's changing from one where returns was driven by macroeconomic stability. So you saw FX kind of normalize, you saw inflation normalize, you saw interest rates normalize and improve. So that naturally filtered through to capital markets, and I think going forward and how we assess the environment in the future is that investors need to be a bit more selective because the terrain is quite uncertain. So even though there's all those headwinds, there's certain offshoots with the potential Dangote refinery listing. There's also the FTSE index inclusion conversation that is spurring a lot of investments, interest in our market. But I think the most critical factor is the fact that companies' earnings have simply not, or rather prices haven't caught up to companies' earnings.
I could have told you that myself, being one who purchases stuff and done a lot of expenditure recently. All right, now you can be a part of the conversation and can take advantage of these financial experts in the studio today to ask any questions that you might have on today's topic. We're reviewing the Nigerian market in the first quarter 2026, and we're looking at the question, should I hold my investment in Naira or dollar? And our questions have already started coming in. If you've got one you'd like to add or a contribution, send it to us via WhatsApp on 0704 1001 973. That's 0704 1001-973. I did say his name, but let's give you a full introduction. Walade Atekoja is the Chief Investment Officer, Quadros Asset Management Limited, and sharing his knowledge with us today. So let me hand over to you, Raf.
Okay, so can you talk to us more about the overview, of the Nigerian market in Q1, looking at stocks, looking at fixed income, looking at alternative investments, and then from there we can then jump into what should people be doing? How do you see the currency performance, in the first quarter as well, Naira dollar? What should I be doing going into Q2? Last week we've talked about how people didn't achieve their Q1 goals, and we thought that this would flow into that topic,
That's
by
right.
getting people to then understand what they should be doing, going into the second quarter.
Yeah. Essentially, what people need to be doing is understanding that you have to be a bit more selective around the investments you're making, right? You have basically in Q1, essentially the stock market outperforming, and that was driven by certain factors that were largely regulatory. So the PENCOM guidelines were expanded to allow pension funds to buy more equities. You even saw retail investors becoming a larger share of the market, trying to tap into that.
Who drove the market more in Q1? Was it the foreign investors as it used to be, or the local investors, or the retail?
I think the data suggests that it's still local. So out of the $19 billion of capital that was imported into the country for portfolio investments, only 1 billion came in to filter through the equity market, right? The reclassification by the PENCOM guidelines allowing pension funds higher allocations to equities also saw somewhat of a similar number.
Okay.
So those two factors largely drove an interest in the market. Right?
Okay.
And I think even on a retail level, it's like people that have shied away from equity markets for a while are now coming back and saying, okay, maybe it's worth taking a risk.
Okay. I hope people are aware that it's more long term and this is just a cycle in the market. How about the fixed income market?
So the fixed income market in Q1 was quite interesting. So we cast our minds back to pretty much a year ago. Interest rates were at multi-decade highs, right?
Correct.
So now where we sit is that interest rate regime has significantly eased. It has eased because FX has been quite supportive. The central bank has done a lot to clear a lot of the irregularities that existed in our market. So, and inflation has also started declining, right? So the situation that occurred in the fixed income market was one where investors anticipated further cuts by the CBN to reflect that inflation has normalized or is normalizing. What's it called? FX is improving, and there's international investor sentiment is positively disposed to Nigeria. So those three factors made the markets kind of run away with the expectations of how generous the CBN governor could be to deliver rate cuts. So that naturally just meant that investors were positioned to take advantage of rates declining. So they were buying quite a number of bonds, long tenor securities, trying to lock in yields so that when rates decline, they make a bit more money. But as is the case with the CBN governor, he has shown a tendency to err on the side of caution, right? So he decided I only cut by 50 basis points. The market anticipated 2%.
Yeah.
So so when that happened, everyone just realized that, oh, maybe I'm the one holding the bag, and started flinging their security. So it was a topsy-turvy Q1 in the fixed income market. Rates declined and then accelerated back up.
How about the alternative space? Any good news?
The alternative space is still largely burgeoning in the country. I think one thing that you've seen a lot of is that non-banking financial institutions are stepping in to create more bespoke solutions to either a lack of capital access to SMEs or individuals, right? So you're seeing the launch of more private credit funds, you're seeing those kind of activities. And what that essentially speaks to is the fact that in a world where macros are better, in a world where investors are looking for opportunity to diversify, there's the yearning by asset managers and non-bank financials to solve a solution for that need. So you've seen the likes of quite a number of asset managers come out with large private credit funds, and I think it speaks to also a deepening of the understanding of what risk is, real risk is, right? So I think it's something that is extremely positive for the development of the capital markets in Nigeria.
Okay. So we saw a lot of movements, with the currencies in Q1, naira and dollar, and I know Nigerians want to know, dollar. For some reason, there was still some sort of spike in March, right? I think we're going to come to that as well. But how has the dollar performed in Q1? How has the naira performed in Q1? And as an investor, what should I be doing? Should I have a mix? Should I consider where do I have obligations, abroad or Nigeria, to decide what currency should I keep?
I sorry to interrupt, but I'm the radical one. Or should I do a Chico and have this bag that I bought from an army surplus shop in the UK many years ago? It's called Indestructible. And so I dig a hole in the ground somewhere and I put dollars inside it and I just bury it in the ground. This is true, I mean it, but it's in a secret location. You can never guess where it is. Honestly, you can never ever guess where this hole in the ground is. And it's not an option. I mean,
in the midst of uncertainty, you don't know.
You have to hold cash. Cash is king. So I think the expectation is that Naira continues to outperform, right? And that's simply because you have generally seen better monetary discipline and better fiscal discipline in frontier and emerging markets, and Nigeria being one of them, right? So if you cast your mind back probably 5 years ago, there was this topical issue called the Ways and Means, which was essentially a backdoor financing that created an incestuous relationship between monetary and finance and fiscal authorities. That has been cleared, and that's a major win for the country, right? So naturally, if our interest rates remain high, it's extremely likely that Naira will continue to appreciate, especially if a number of the geopolitical tension that's essentially grabbing the news headlines at the moment sort of dissipates. So I think what we basically have seen in March that Raphael mentioned was that there was so much consensus, and that's kind of market psychology, that when there's so much consensus about a particular direction, which at the time was USD is going to devalue because rates are not attractive. People don't really understand what the administration is doing, and
that's the US administration.
That's in the US administration. And then if you contrast that to the frontier markets that have exhibited a number of monetary discipline and their rates are high, it suggests that the Nigerian Naira, as an example, will appreciate.
So we should be doing more of Naira?
Yes, I think so. And even industry data kind of suggests that, right? So the spike you saw around COVID in dollar funds has largely been taken out of the system. So dollar funds in the country are growing at high single digits, and then you're seeing money market funds growing at astronomical, like 100%.
Yeah.
Almost any asset manager, you can basically launch a money market fund, right? So even though listeners might be thinking that they are not equipped to sort of handle these risks,
Yes.
I think that their actions actually show at a macro level that understanding is there, right?
Okay. So Nigerians should be looking at the stock markets, fixed income markets for short term, medium term, and then money market as well if it's more short term.
Correct.
Okay. So
Treasury bills?
yeah, treasury bills. I mean that's money market as well. So, but there was a news about World Bank, downgrading their growth forecast of Nigeria from I think 4.4% to 4.1%, and they're considering majorly the impact of the energy cost and other things. What's your take on that? I mean, going back to your point on Naira is getting stronger, and expectation is that it will continue to get stronger, but the downgrade, how does that impact this position?
I think the downgrade is reflective of reality, and it's always good to get feedback, right? So it's just us understanding what that feedback means, and it simply just means that given the shocks in the system, Nigeria's ability to manage any additional shocks has weakened, right? So it's not necessarily that the economy isn't growing, it's not that inflation is that much of a problem as it used to be. It just means that our debt funding costs, our debt burdens, our funding costs, and external pressures are rising faster than our revenues and our buffers. So the downgrade isn't saying Nigeria is failing, it's saying Nigeria is more vulnerable to shocks, and in a market, vulnerability is always priced in before conversations can happen.
Okay, so the conclusion is that we should just continue to look inwards.
Yes, yes, exactly, because ultimately, I want to be an optimist here, right? So I believe that
Likewise.
at the end of the day,
Me too.
this conflict will sort of resolve itself, right?
Okay.
When significant pressures start telling on countries, right? So on our desk, what we've looked at is essentially 4 transmission mechanisms that this crisis will impact sub-Saharan Africa and African countries. You're basically seeing pressures emanating from labor, right? So with increasing the cost of living across the world, how does that affect remittances and FX? So you see that there's merit in sort of that downgrade.
Yeah.
There's also the parts where foreign investors will they be willing? Do they think that this is the bottom? Do they think we have more to go?
Yeah.
And will they hold back their capital? That affects the liquidity of FX within the market, right? You also have, because everyone is kind of uncertain, there's a flight to safety.
Yeah.
So you see dollar rallying to above 100, right, against the benchmark currencies. And then obviously you see trade, right? So just in that little Strait of Hormuz, right, you have...
It's not that little.
It's not that little, what is causing.
It's what is causing.
Yeah? But I mean, literally, in that part of the world, you have essentially pressures on agriculture, pressures on technology, agriculture and energy prices. So it's going to affect trade. So essentially, we welcome the feedback, and the question is just, what is the policy response that the authorities need to put in place to address some of these issues? And that's why we're extremely constructive on the CBN, right? Because the decision to err on the side of caution with the benefit of hindsight looks like an optimal decision. And it's not a mistake that he was awarded the Central Bank or Central Bank of the Year, right? It's a testament to how we're perceived internationally.
Yeah, so I think the CBN governor. I think I sort of support the CBN not cutting the rate largely, and that's because I see it's a year prior to election. I see money coming into the system. I think it's also a way to manage what they've built over the last 2 years. To manage things. The reforms so that we can continue to see the positive results. So I think the decisions to me, I think it's been positive so far. And I think it's also a way to also manage whatever is happening between US, Iran, and the impact of energy. But in terms of fiscal, what can you say with the introduction of the new tax act in January? Has that impacted investors' behavior and the market as well? What are your thoughts, or what have you seen in Q1, and what should we be expecting in Q2?
So I think the changes to the tax policy are positive, and you kind of see what the thinking is behind it. I just think that if you sequence the effects in time brackets, short term, naturally, it increases tax burdens on individuals and corporates. So after everyone has basically bought equities, thinking that...
Sorry, but I think that will be on large corporates and
yes, large corporates.
High net worth individuals, because I think it seems to favor
smaller
low income earners.
Yes, definitely.
Yeah.
Right, so that's kind of the point I'm making, is that if you look at some of the results that you've seen a massive jump in tax exposures, right? So to what extent investors calibrated that in the expectation, I'm not too sure, but I think that once we pass through this year, the tax revenue becomes more, and that's supportive of the government. I also think that I think on a longer term basis, as a foreign investor, you want to see a country, and speaking to what we just discussed about World Bank, is that one of the things they said was that we have too much of our revenues attached to debt service payments, right? So if you expand the tax base and you increase your tax revenue, you have a better base of revenue to do whether healthcare, do other things, right?
Yeah.
So I think ultimately the decision and the passing of that act is long-term positive for Nigeria. People see us as serious.
Well, are you beginning to see investors apply that to their wealth management strategy?
Oh yeah, definitely. So we now see a bit more intentionality in how people, for example, think about their T-bill exposures, right? Because now it's clear that there's a tax impact. We also see that it now makes your equity portfolio more captive, because you don't want to take out that equity and then suffer the tax implication on it. But as well, right, it now means that the companies now need to do more to offset that potential tax burden.
Yeah.
Right. So you see, like, in a way, it builds efficiency.
Yeah.
In a way, but I think over the short term, investors are calibrating towards it. What the final state looks like, I mean, it's anyone's guess.
Okay.
All right, I think we are answering the question. Now, earlier he had picked a song, and we're going to try and squeeze that in. But interesting. So overall, in concluding, essentially, in answering that question, what we're saying is, well, Naira is kind of, that's what you should be looking at.
Naira,
yeah,
yes.
That's the
Naira,
simple answer.
Naira.
All right.
Naira. However, if you have a dollar obligation, you can hold a little in dollar, but concentration should be Naira.
Concentration should be Naira. There you have it. You heard it from the horse's mouth. But from an expert who certainly knows what he's talking about. Final words?
Yeah, we'll continue this discussion next week. We're bringing in another investment management expert, head of equities in one of the asset management firms as well, to continue this conversation so that it's clear to Nigerians what we should be doing as we begin second quarter 2026.
Thank you very, very much, Bolade, for coming through. And thank you for your questions. Unfortunately, we've run out of time, can't deal with them. But Wealth Management in You comes your way at 5:30 every Monday here on Classic FM 97.3. Bolade earlier on had said that what he'd like to listen to is D'Angelo's Lady. Yes?
That's correct.
So D'Angelo's Lady will come up after this break. This has been Wealth Management in You. We look forward to you joining us next Monday for another edition of the show.